Lakshmi Mittal moved to Dubai lately. Why he moved all the way from London to Dubai?
Tax cannot be an enabler, or it cannot be the sole reason why people would come here and operate. It was ease of business and connecting from here to do a lot of business across the markets.
For any company who is planning to form a company in Dubai, what are the 3 prerequisites for them?
In any country, to set up a company is very easy. To unwind and change is very difficult. Learn the hard way if you don't do the homework before. UAE provides you with an overall package. Very high infrastructure, very good safety, top on ease of doing business.
Why 51% ownership of a local Emirati was mandatory in mainland companies?
Objective was almost to restrict any foreigner to have complete control over the B2C segment. Anything that touches with a direct customer, somewhere linked to having an Emirati own it, with a view to create an employment opportunity for them and also generate a source of income for them.
Welcome to yet another episode of the Jewellery Pod. I'm your host Krishna. Today's topic is most demanded yet very sensitive. I couldn't dare to do it by myself, and for that reason I have got an expert. The topic is taxation and compliance. I'm honored to be joined by Nirav Shah from Fame Advisory, who has started this right before taxation was important for this country. And he has years of experience where he handheld many companies, not only with compliance, and to guide them right when it was chaotic. Without further ado, let's join our hands to welcome Mr. Nirav Shah. Welcome, Mr. Nirav Shah. Welcome to the Jewellery Pod. Can't wait to unlayer the topics that I've just spoken about. And taxation is a big topic, right from India to UK. Everyone is settling down in Dubai, and they are kind of, curious at the same time, surprised how everything is working. Again, knowing our history, before I started podcast, and you were working again with a diamond site holder company, and I was working with a diamond site holder company, though for marketing, and you were taking care of accounts. So how taxation then and today was, and what inspired to open your own company?
So first of all, thank you, Krishna, for having us. And it's, of course, indeed an honor to be part of the Jewellery Pod. Yes, the journey has been very interesting so far. So let me just give some perspective. So it kind of builds up into the discussion that we are going to have. So I am a chartered accountant from India, specialized in international tax and compliances. I was working with a diamond site holder for close to 9 years. And I was taking care of about 10 countries' operation from tax, legal, finance point of view. And which gave me first an experience of dealing with multiple countries' tax system and managing all of them, And that kind of gave me a lot of confidence that yes, being in UAE also you can have a tax practice. So when I started to have that practice of my own in 2015, when tax was not something known in this part of the world, and people were trying to suggest that, this will not help me survive and do all the other things that one would want to do. But I was very clear that I want to be sticking to what my core knowledge is, and want to make a difference to people and add value to their perspective from this point of view. And so we founded Fame Advisory DMCC as the tax consulting firm at that time. In fact, the funny thing was that I wanted to set up a company to do tax consultancy as an activity.
Right.
Now, DLD, though, had an activity, but was only allowing a professional service license, which means it's a sole proprietorship.
Right.
So I said, no, in this country, I can't have unlimited risk.
Yeah.
So you need a company to have a limited risk, right? And then, of course, the DMCC legal head knew me very well, thanks to my working with another diamond site holder. So then I asked him, and he said, yeah, go ahead, set up. I'll give you a license. So that's how we were one of the first tax consultancy company to be set up in UAE, way before VAT was thought of.
And I love anyone who takes first mover advantage in this country because it pays back. My tax knowledge is not surely 100% yet, but I do remember working back then, 2015, 2016, they announced VAT first.
Yeah.
And after a few years, they also announced that there would be a corporate tax. There was already, everyone was running like a headless chicken when they announced VAT. What was the scenario then?
Yeah, so look, it was very interesting. Again, when I set up in 2015, there were no talks about tax.
Mm-hmm.
It was difficult for me to get clients to do the tax advisory for. So typical clients were either multinationals or large families who needed cross-border advice and not really UAE advice, because UAE never had taxes, right? So we started with that as our focus. In 2016 and 17 beginning is when they announced that VAT will come in from 2018. Now, being the only guy who knows something about tax in the city where tax is coming, so it kind of helped, right?
But don't you think you took a big risk back then, because nobody was needing your services those days?
It was a very big risk. I didn't know how and where I'll get clients from. So, moment the VAT got announced, we first did service and then started earning something out of it. So, like what we are doing the podcast now, we started doing training for professionals of how to interpret tax, how to read tax laws, how to advise, what to do. So, along with ICAI, IBPC and various professional bodies, we did multiple training between 2017 and 18, where we would have ended up training close to 5,000-6,000 professionals.
Within UAE?
Within UAE.
That is brilliant.
Okay, because each of our masterclass with say ICAI was attended by 500-600 people.
You're talking about inclusive industries, not only jewelry.
No,
all
across
other
industries.
Okay.
So it was an issue for everybody.
It was.
Okay, it was something new for everyone. So we were trying to help everybody kind of accommodate and understand what it means, you know.
And if I may ask, what is so lucrative about UAE taxation that companies across the world are settling over here and forming their companies in Dubai?
Look, I have always said this, that tax only becomes one of the enabler. It cannot be the sole objective. So even UAE provides you with an overall package, very high infrastructure, very good safety, top on ease of doing business. Mm-hmm. When you add all of this together, that's when it started attracting people to be based here. So tax cannot be an enabler, or it cannot be the sole reason why people would come here and operate. Earlier, again, it was ease of business and connecting from here to do a lot of business across the markets. And that's where companies were coming here. There were two periods, as I would call it. One is the pre-tax era and one is the post-tax era. Mm-hmm. And what we have seen in our experience is that post the introduction of taxes, it has become an even more attractive market.
And why would you say that? Because
now you are a more regulated and compliant economy, and you are still taxing at one of the lowest rates in the world.
Right.
Your VAT is only 5%, where the world average is more than 10 or 15. Your corporate tax is only at 9. There are only 3 other countries in the world which have lower taxes than you. So you can't get more attractive than this. And you are still compliant, meeting all the requirements, and everything is legitimate now, right? So that kind of adds the whole purpose to why you're doing it. And nobody kind of challenges you that, oh, why you're in UAE? Mm-hmm. Why you are in, people now say, why you are in BVI? Why you are in Cayman? Why you are in Bahama? Do you want to hide something?
Yeah.
Now no longer anybody can say that about UAE. Because you are a compliant economy.
And right before time working on this project till date, nobody is better than you to answer this. What was so necessary for UAE to introduce taxation? Are they trying to compete with Hong Kong, Singapore?
So look, UAE has always been a forward-thinking country. Mm-hmm. Their rulers have been visionary. And they wanted nothing short of the best for their own country. So if you want to be the best financial center, if you want to be the globally recognized investment destination, you need a package. Mm-hmm. And having taxes and having compliances is part of that package. And therefore, it was but obvious for them to bring it in. The only difference was when and not why.
Yeah.
When UAE started developing, the vision, and Sheikh Mohammed has consistently said this, that if we want to be the best and we don't want to be the second best. So if your aspiration is that high, you needed to bring in the ecosystem which also matches with that. And therefore, only then you can attract right kind of businesses to come and participate in that journey, not otherwise.
And ultimately it became a hub where companies across the world are settling over here. Lakshmi Mittal moved to Dubai lately, and would you able to tell us why he moved all the way from London to Dubai?
So, first thing is that the trigger was changes in the UK tax system, which earlier used to give certain incentives to people based on something that they called as non-domicile status. And they were then not levying the global tax on those people, and they were not even subjected to inheritance tax and other things. They changed the status there 1.5 years back. Because of which now they all get exposed to very high level of inheritance tax and global tax. And if you don't want to do that, you need to move your base. So that's one part of the equation, that you want to make it more tax efficient for you as a family to be based somewhere where it is compliant but it's not very heavy, right?
Yeah.
So that's the choice that they are making. That when they are moving away from UK, what are the next best available option? And that's where Dubai fits in.
Right.
That now you are the next best available destination when you look at security, when you look at safety, when you look at connectivity. ArcelorMittal has businesses all across EU and they are expanding into Asian market. So what better place than to be based here, which can give connectivity on both sides. Again, the time zone wise, you are only 4 hours away from London and you're only 4 hours away from Singapore, right? So within your working day, you can deal with east and west without having to make too much of an extra effort on adjusting your working time. All these are biggest advantages.
With every sentence, you're making more and more easier for everyone to decode the taxation. Talking about, again, understanding taxation well, for any company who is planning to form a company in Dubai, what are the 3 prerequisites for them?
So look, first of all, very common mistake that companies make when they come here is that they look at only the low cost available option to set up, which 98% of the time are not the right fit for your requirement. So if you go and don't check what is the right fit for your requirement, for example, for jewellery companies, we would say either do a mainland or do DMCC. Why? Because you have the right ecosystem. If you go and set up in a Maidan free zone because it's cost less, you're not going to find an ecosystem. You're not going to find a market. You're not going to find your customer. And therefore, you have to still go and meet them at different places.
Right.
And you're not going to make sense out of that whole process, right? So that's why you need to first look at what are the right option for you to set up.
You're talking about opportunity cost.
It's not just opportunity cost. It will also be a setup cost, and then redoing the whole thing has another cost attached to it. In any country, to set up a company is very easy. To unwind and change is very difficult. So the same here, right?
Yes.
So then you learn the hard way if you don't do the homework before.
What is main difference between a mainland company and a free zone company?
So technically today, if you ask me, there's no difference. Why? Because earlier mainland zone meant where local Emirati would have 51% ownership. And certain B2C businesses were reserved to be done in the mainland only, which continues to remain that way. But now that ownership criteria has gone.
Okay.
So you can own the company 100% in mainland or in free zone. So from an ownership point of view, there is no difference. From a tax law point of view, yes, mainland company pays full tax, 9% rate. Free zone company may get the 0% rate subject to certain conditions. Now, if you put DMCC in that line, then DMCC mainland is more or less similar. Because DMCC is not a designated free trade zone, and therefore certain activity, even if you do in DMCC, are still attracting 9% tax. If you talk about just the jewellery business, the jewellery, diamond, rough diamond trading, all of that, if you do in the DMCC company, you're still taxable.
Okay.
Unless you meet certain conditions, only do certain business.
So are you talking about the amount or turnover?
There are multiple conditions attached to it, and I don't want to be technical on your jewellery board. But yes, you need to have a substance. So you need to have an office visa and all that physically in the free zone. And along with that, only certain activities.
Okay.
When done, then you get 0% tax rate. Otherwise, you pay 9% tax rate. That's how the structure is. That it was structured in a way that everybody doesn't get a benefit. Only those which are selected and intended gets the right benefit. So that was the whole idea.
I do understand it will take another hour to just understand what criteria and what parameters make a company taxable and non-taxable. In simple word, is there any amount where you get taxed? Is there any certain amount that beyond that you get taxed or?
No. It's not linked to the amount. It's linked to the condition to be met by the taxpayer. That if you are based in a free zone, you need to have a proper physical office and not just a virtual or a business center office. You need to have at least right level of people employed on your visas. You need to be spending a certain basic level of operating expenditure relevant to carrying on your business. Again, it's not an amount threshold.
Yeah.
It's proportionate to what business.
It's whole ecosystem that they review.
So one, you need to have this. Only if you have that. And then if you are dealing in, say, logistics sector, shipping sector, commodities trading, but only commodities which are listed on the stock exchanges or commodity exchanges.
Okay.
Or general distribution if you are carrying on from a designated free zone.
Okay.
So those conditions if you fulfill, then you are entitled to claim a 0% tax rate. Not otherwise.
And thank you for decoding it in such a simple way. Nirav ji, if you can please throw some light, why 51% ownership of a local Emirati was mandatory in mainland companies?
Earlier, the rule of 51% was mandatory with two objectives. One objective was almost to restrict any foreigner to have complete control over the B2C segment, as they call it, the business to customer segment. That was reserved for mainland.
And
right?
what businesses we are talking about?
So anything retail.
Okay.
Right? Anything that touches with a direct customer. So it could be your automobile distribution, it could be your textile cloth distribution, it could be brands distribution, anything. Plus restaurants, cafes, manpower supply, production, manufacturing, So all that they wanted it to be somewhere linked to having an Emirati own it, with a view to create an employment opportunity for them and also generate a source of income for them. That was the objective. But as they started growing, they knew that if they keep this restriction, then the amount of investment that flows in also gets restricted. So they thought it best in terms of development outlook to remove those restrictions away and invite more and more people to continue to own 100%, but make those investment in the country.
Okay.
And grow that entire piece, So that's how the change in thought process. I think it comes with the growth.
It does. UAE have shown the world what could be done in 10 years. And I have not spent like 20 years or 30 years in this country, but I take pride in telling people that I have seen JBR growing in front of me. And not only JBR, anything beyond Ibn Battuta Mall was desert, right? And the tremendous growth country.
You're still talking about less than 10 years.
I'm not comparing with you.
So I came 20 years back.
I can just tell about my story.
I came 20 years back.
Yes.
I have seen Burj Khalifa grow up.
Yes.
And I have seen Palm being commissioned.
Wow.
In Marina, when I came in, there were only 6 old buildings of MR. Rest all has come up in front of me.
Wow.
And Ibn Battuta was still very new.
And that sums up our experience in the country.
Yeah.
Nirav ji, is it true that DMCC offers 0% taxation to diamond trading company?
Well, yes and no, because DMCC is meant as the free zone which is most attractive for diamond trading companies to set up in. However, like I told you, the eligibility is not linked to which free zone you are in. So one, in every free zone, wherever you want to take the benefit, you need to have substance. So office, visas, employees, expenditure, all of that. Apart from that, so for DMCC, which is not a designated free zone, if you want to take a 0% benefit, only the companies which are dealing in commodities, which are traded on commodity exchanges, can qualify for 0% benefit. Diamonds are not. So diamond trading per se does not fall into that. There's also a general category where if you are only dealing between the two free zones, then you get 0% if 95% of your turnover is only between the free zone companies. So a lot of the diamond trading company today are trying to fall within that exception and take 0%, but otherwise you don't get it. So otherwise you have to either go to a designated free zone like Dubai Airport Free Zone and others to be generally part of being distribution activity being carried on from there to get 0% rate. Otherwise, you don't get.
And that brings me to my next question. Why majority of the companies set up in Davza, in airport free zone? What are the benefits?
Again, Dubai Airport Free Zone or Jebel Ali Free Zone or Dubai South, which is the new airport coming up, are the only 3 designated free zones which has entry and exit restriction for people and goods to move into the free zone and get out of the free zone. So when they are designated for custom purposes, those are the one where if you are setting up a distribution company, a distribution activity, then you get that benefit of 0% rate if you are set up in those locations. Now, for diamond and jewellery trade, custom clearance is the most important part, which happens only at the Dubai Airport Free Zone and not at the Jebel Ali, because Jebel Ali is more linked to the port.
Yes.
And diamond or jewellery don't move in the port. They are air cargo. So air cargo custom is located at the Dubai Airport, which is near the Dubai Airport Free Zone. So therefore, for the jewellery company or diamond company, it makes more sense to be in Dubai Airport Free Zone rather than being in Jebel Ali.
And I also observed lately that more and more Indian jewelry companies are setting up their base over here. Is it beneficial for any jewelry company from India to set up their office in Dubai?
So for any Indian company, when you're looking at expanding overseas, you need an enabling infrastructure or an enabling environment which helps you to grow. Being in UAE has a lot of other advantages, I told you. Connectivity, location, the time zone. So if you're based here and you want to start expanding your business to various different markets, it's easier for that from here. So that's why a lot of people start looking at it. Plus, you have a very large Indian diaspora. So that becomes a natural market. So that's how the jewelry companies and all have started using Dubai as a base. So when you take Malabar or Joy Alucas or Tanisk, they are all coming up, setting up here, create a base and then all expand regionally and internationally from here.
And does it gives them liberty to do free trade or smoother trade in GCC countries besides UAE?
So GCC trade becomes easier because you're based here.
Mm-hmm.
So movement of goods and everything is more easily controllable. Of course, each trade has its own nuances and you don't have free trade agreement and you don't have custom duty exemption and all that unless you have manufacturing here. So those few who are manufacturing goods here will get a made in UAE certification. Then they can get a custom duty free access into GCC and those advantages are there, but very few can take those. Otherwise when you're just trading you will not get that advantage.
The provision of Makasa still exists?
Yes.
What is Makasa exactly for trading companies?
So Makasa is nothing but GCC has a centralized custom clearance, right? So if you have cleared goods in one country and that goods move from that one country to another, because it's a centralized custom clearance, the custom here will give you a document saying that yes, I have collected the custom duty and therefore it can move freely within the GCC region. That's a document.
And which countries are included in this?
So 6 GCC countries, Oman, UAE, Saudi, Kuwait, Qatar and Bahrain.
So if I clear my goods in Dubai or UAE?
So, again, I'm not sure whether
because this is a question from the exporters and people who often do shows in this region.
So what happens is that when you're bringing goods for shows, you're bringing it on a temporary clearance basis. You are not clearing for custom purposes. And therefore you in fact declare that I'll take all those things back. Right. And only if you end up selling that you clear, you pay duty and you sell. Right? So that's on exhibition side. Now interestingly with the development of say Saudi and others, they have started insisting that if you're bringing goods into our market, please bring it to our ports directly, rather than clearing it from UAE and bringing it in. Earlier, a lot of on-road cargo movement used to happen. So that was part of the Makasa clearance and all that, and that was fine. But they are increasingly, with time, they want more and more of that to touch directly into Saudi ports or Saudi airports to see the direct, visibility of the trade rather than rerouting it from UAE alone.
But I think that's a long road to be more clear and easier for traders to go
Of
through.
course.
It is still takes some time to be
Lot
as
of time.
smooth. Yes.
Because, for example, for jewelry, half of the Saudi trade does not happen through the normal routes because of the very high custom duty, right? There's 15%. I mean, there's a custom duty and then there's VAT of 15%. So if you do it that way, your product becomes kind of, very difficult to sell. So those challenges remain as a market.
As a taxation expert, as someone who's so pro in compliances, what are 3 mistakes any company do while setting up their company?
So first point, I already mentioned that it is about not choosing the right jurisdiction. Secondly, lack of foresightedness, that you don't actually anticipate the full cost of operation and you often end up making mistake with that. Third, of course, is the lot of processes where it is, say, India particularly.
Mm-hmm.
India itself has FEMA and other regulation. You need to first comply with them. You need to get all your document attested and bring it here. That itself is a cost. And only after then you can start your company formation process when you're doing it. So these 3 things, when you don't have a proper visibility or guidance on, can actually, be very, very, I would say, cost heavy for anybody who is not going in with right kind of preparedness.
And without any bias, not that you own the business, they should consult with a taxation expert in Dubai before setting up a company.
So like you said, that without any bias, that okay, I run a tax consulting firm. So I would always say you should consult an expert. But today the time is such that if you don't take the right guidance, your chances of making mistakes is much higher and incurring cost is much higher than anywhere else. And Dubai is not cost friendly.
It is not.
Okay, it has a heavy cost attached to everything that you do. And therefore, we at Fame Advisory, we look at cross-country taxation.
Mm-hmm.
So we understand Indian issues also. We understand UK issues also. We understand US issues also.
Mm-hmm.
And then we try and balance it with our knowledge overall as to how to make it more efficient with all the knowledge together. And come up with a solution that works for you.
Yeah.
It may or may not be setting up in UAE alone. It could be anything. But it has to be a solution which works for the client. Right? And the other advantage with us is that we not only advise, we'll help you execute. So the proof of the pudding is in the eating.
It is.
So if I tell you that, yes, this will work beautifully, but then you go and set up with somebody else and he doesn't do a right job and you can't eat it, there's no point. So we try and help you end to end, that we'll understand your home country issue, we understand your destination country issue, we give you the right structure and we'll give you structure which works so that we will help you execute it if you have any problem with that. So that's how we kind of cover the end-to-end cycle for clients.
And it always does. And to have someone of this region to help you or guide you through is a bliss, because correct me if I'm wrong, that we learn from our mistakes. We just did our own back and forth learning, going back to people, asking, and it literally made us stand somewhere that we do hold an authority to tell people, yes, you can trade with certain party, you can do formation this way, and it kind of makes a lot of sense. And why do you think for jewelry companies in UAE it is tough to get a bank account?
So UAE banking was very easy when I came in, or maybe I would say up to 5-7 years back. Okay, anybody could open accounts, this, that, very easy, But with all the tightening that has happened through government introducing various legislation on AML, on UBO declaration, now with taxes, when you put all of that together, okay, and then you are in an industry which is regarded as high risk anyway, because you deal with the material which is very high in value. So even the smallest of the transaction can run into millions, which is not the case with every other industry.
Yes.
Your material and your valuation can only be understood by those who are in the industry.
Mm-hmm.
So a layman can't make a difference between a 1 million transaction and a 10 million transaction, where both will appear very identical
Yes.
to a layman,
Mhm.
right? So these are the challenges which classify our industry as high risk, jewelry industry as high risk, and therefore the banks who deal with them are also few. So you have few banks which can lend to you, therefore you have only few banks which will open the accounts for you, and others will, even if they will open, they'll open with a lot of conditions attached to it. So that's why it's very, very challenging. Let me not mince my words. Very challenging to open even a bank account, and getting credit, forget for next 3 years. You
Okay.
operate for 2 or 3 years, create a track record, and then only you can think of a credit line.
With all the right documentation and all the
Everything
criteria,
being perfect.
how long it could take to open a bank account?
If you are in the goes with the right reference, and if the bank knows your name, and if you're leading one of the leading site holder or whatever, maybe 3 months is the earliest, 3 to 4 months. If you are not in that league, it can go up to 6 months. If you have certain adverse remark or adverse media, it could be 9 months, 1 year, or just a rejection.
Nirav ji, are you in capacity to also comment on personal taxation if there's as a UK national or if there's a US national who forms a company in UAE or is employed in UAE? Are they still paying taxes to their country?
So US citizens are bound to report everything because US has global taxation links to its citizenship.
Okay.
So even though the US citizen is not living in US, he's bound to report all his bank accounts to US. He's bound to report all his income to US in his individual capacity. And all of that is subject to tax. Of course, as a non-resident, you get certain threshold up to $100,000 or $120,000 of foreign income, you get deduction and all that, but you have to report. That's mandatory. If you are a UK citizen, but you are a non-resident of UK, and you are not spending more than 90 days in UK, and you don't have a connection or home in UK and family is not in UK, then you are non-resident from UK tax perspective, and then you don't pay any tax on global income. Same goes with India. So similar conditions. Again, if you are an Indian non-resident living here, then you don't pay tax in India, but you have to be non-resident properly.
Again, Neeraj, thanks for decoding everything so smoothly. I am really curious to know why so many diamond companies from Antwerp are also moving to UAE. Is there something special that UAE is offering to them, or if they are not really comfortable operating in their own country?
So what has happened over last 8, 9 or 10 years is that DMCC actually created an entire ecosystem within UAE and attracted a lot of those companies to be based here. Plus with the connectivity and the entire ease of custom clearance and all of that, it made sense for a lot of them because they already had manufacturing in India. If you are bringing goods from mines in Russia or Africa, why do you need to take it to Europe and then bring it to India? So the entire rough sourcing market has slowly moved here, which was earlier in Antwerp. From there on, Antwerp was still having a very relevant position for the EU distribution.
Yes.
That anything to be sold in EU in diamond sphere, most of those companies were based out of Antwerp and they were selling there. With UAE coming in and a lot of companies being based here, they started having the same marketing or sales force out of here,
Right.
who was visiting various brands, be in Paris or London or wherever, or Switzerland and Geneva, and to sell directly to them. And again, it made sense from an overall tax efficiency and ease of doing things because goods were manufactured in India. Again, why would I take it to Europe, do the sorting there, and then sell it to my client?
Yeah.
If I can do that in UAE, that becomes simpler and easier. So that, all of this put together has made it more attractive to be based here than anywhere else, because now this has become one of the best market for diamonds companies in the world, right?
Definitely has done a phenomenal job over the years. But Antwerp as an association is also making efforts to bring back the shine, bring back what they used to stand for.
So they should continue to do that with creating right kind of an atmosphere. But Belgium particularly, with having very high crime rate, is not helping that entire safety net to be created for people to go back, So that's the challenge which every country kind of faces. Sure, they should continue to work hard.
I'm so sure that all the things I have thought in my mind over the years, I've got an answer in an hour's time. Thank you again for sharing that high intensity knowledge in such simple words. What have been your non-negotiables all these years working in UAE?
So, first of all, again, thank you for having us here. And I think
Pleasure.
it was a very interesting conversation that we had centered around the jewelry sector, but giving a highlight of what UAE can do for them. See, non-negotiable when you look at UAE is that one, you need to be ambitious. Other is that it spoils you. That once you started living here, no, and you're almost unfit to live anywhere else, So that's the another, you can call it downside or the strength, But yes, you need to be very clear of what you're trying to achieve, how you're trying to do, and you have to operate within your framework. As long as you define that correctly and you're compliant on all other sector, then this is a place which gives you utmost freedom to do your best. So the results are only based on how much effort you do. And I'm sure you would have experienced that in yourself, in your own growth, that it's only up to you. There's no limiting factor externally. That's the best.
There's nobody stopping you to do good.
That's
There's
right.
no limit to do good over here. And
Yeah.
UAE or this country or the city especially
Gives us that-
rewards the doer.
Yeah.
It always rewards.
It gives
the
us
doer.
that platform.
It does. It
So
does.
that's where we all are.
Do you have a concluding message for the listeners of Jewellery Pod?
So very simple is that do your homework.
Mhm.
Don't just run blindly because one of your friend, colleague, customer, or supplier is doing something. Do your own homework. For each one, it will be very different. And then take your steps because every step is costly.
Thank you, Nirav ji.
Pleasure. Thanks a lot.
I do hope you have gained some good insights about taxation from this episode, and I tried to cover as much as I could, but if something is missed, please do not shy away to write in the comments below. Write to us. All the details in the description. This podcast will be distributed across 7 platforms. Do interact with us. Let us know what you would like to hear next time, and we'll make sure to bring it to you. Till we meet again, thank you. You're listening to the Jewellery Pod.